Hi guys, it's Karen. In this video, I'm going to talk more about candlestick patterns, and in particular Japanese candlestick patterns first of all. So in this left example here, this is an example of a bullish candlestick, where the open is around here, and the close is here. And because the candle has closed higher than when it opened, so the candle is actually green. And this wick here represents the lowest point of the value of the instrument during that specific candle, and this wick here represents the highest point obtained during the actual duration of that candle. And so because it opened significantly higher than it closed, it's green. Looking at a bearish candlestick pattern, in this case, it closed a lot lower than where it opened, and so naturally it's a red one. And this wick here represents the lowest point obtained during the candle's duration, and this top bit here is the highest point, this wick here. And so overall this is a bearish candlestick pattern. And something to note is that in real time, whilst the candle is in the process of finishing, it might flip back and forth. And so sometimes it's better to just wait till the candle actually closes before you actually make any big decision. And of course, don't trade purely based on candlestick patterns. They of course have to be used in confluence with other things, and especially looking at their interaction with key trend lines, support and resistance, and also EMAs as well. That's something to really consider as well. So now I'm going to talk a little bit more about the specific candlestick patterns that you might see. So starting off with a really common one, this is the bullish and bearish engulfing pattern. And the left example is an example of a bullish engulfing candle. And as you can see here, you've got this bearish candle here, but the body of this bullish candle here completely engulfs that of this left candle here and closes much higher as well. And this typically leads to a bullish trend, and often it can be a sign of a reversal, but of course you have to use this with other confluence as well. And the opposite here, so in this case you've got a candle here, a bullish candle here, which closed at a positive note. It closed a lot higher than it opened, but then afterwards you had this bearish candle in which the body completely engulfed the body of this one, and we closed much lower than we actually opened. And so this is an example of a bearish engulfing candle. And often, sometimes, the actual engulfing candle can have a significant amount of magnitude greater than that of the bullish candle here. And so, of course, the length of these candles will greatly vary. And so I mentioned how this can potentially be a start of a bullish trend and potentially an end of a bearish trend. This could potentially be the end of a bullish trend, and it could mark the start of a bearish trend. So looking at this 1 hour Bitcoin chart on Bybit, you have this big candle here with a big green body, and that's completely engulfing this relatively smaller candle here. And this is an example of a bullish engulfing candle. And also this candle here, this green body candle here, which has a bigger body than this candle, it's engulfing this candle. And both these, you can argue, are bullish engulfing candles, and ultimately there's now a new uptrend going away from this initial downtrend. Bullish engulfing candles can present a lot different in real life, and as you practice more, you get an appreciation for them. And similarly, here you have this bearish candle here. It's got a big body, and it's completely engulfing this initial green body candle, and this marked the start of this downtrend. And of course, it can present in many different ways as well. And even here as well, for example, you have a bearish engulfing candle that's engulfing this one here. So the next example of a candlestick pattern is a tweezer bottom and a top. As you can see here, we had this downtrend, and then we had this two candles here in which the wicks, the lowest point obtained during these candles, roughly hit the same place. And so this implies that the sellers sold very quickly but weren't able to actually maintain a closure below these actual low points here. And it's very important, whilst patterns can be useful, rather than focusing on the actual names of the actual candlestick patterns, focus on what it actually means. And it's like when you drive a car, you don't have to know how every single part of the car works. You just need to know how to get from A to B. But you can see roughly the wicks closed roughly at the same level, and this ultimately led to the end of this downtrend and the start of a bullish reversal. And this is the opposite. This is literally this one flipped over. And so in this example, we had a bullish uptrend, and then we had these tweezer tops. So the actual wicks ended roughly the same place, and the buyers could not push further up. And so much to the point we ended up actually closing below this. We ended up closing here, and then we had this downtrend here. And again, a tweezer top pattern might suggest that this might be the end of a bullish trend, and we could potentially have a reversal. It's also very useful to really look how it interacts with key support and resistance levels, and potentially some moving averages as well, because that could potentially indicate some kind of a rejection. So looking at this chart example, I've actually drawn a purple circle here, and as you can see here, we have this uptrend, we had these spikes, but price just could not close above here, and so it was somewhat seen as a wick of emotion. And we can see here that we had these two tweezer tops, and price just had to push up and it pushed down, and we came back down. So this is an example of a tweezer top, and a tweezer bottom would be very similar, but it would just be flipped and a mirror image of this, but towards the bottom. And so if the same thing flipped over happened potentially at the end here, that could potentially indicate some kind of local bottom. But again, always use this in confluence with other things. Look at how this interacts with moving averages and resistance levels to really give a good picture. So moving on to the next candle formation. So this is a Marab Boza candle. And again, the names are nice to be aware of, but what's more important is that you actually recognize how to identify them and apply them in chart practice. So as you can see here, these two candles have very little wicks, very strong and long candle bodies. And this just indicates good momentum and potentially that the initial trend might just continue. And the fact that this had no wicks just also gives this element of strength to the candle as well. So looking at this 1 hour Bitcoin chart on Bybit, you can see we had this initial downtrend here, and then we had a slight retracement up here. And as you can see here, in this purple circle, we can see this big, long candle here with very little wicks. Of course we had some wicks here, and this is again to highlight how you have textbook chart patterns, but real life often presents very differently, and sometimes can have subtle variations. But as you can see here, there's very little wicks. And this just potentially could indicate that this could be the start of a potential uptrend, or a minor retracement at least. But you wouldn't enter and trade purely based on this, but it's just to appreciate that, okay, look, we've had this downtrend, and this indicates potentially some kind of buying strength. And afterwards we had another one as well here. But of course, in this case, the wick was down below. And this is just to have an appreciation of how a Marab Boza candle can present in different ways. And so looking at a 1 day Bitcoin chart, this is a bearish Marab Boza candle. This was a local top here on Bitcoin. We had this huge downtrend, and this candle had very little wicks, some wicks here and some wicks here, but you can see how long the body of the candle is, and it just indicates the actual momentum behind this move. And we had a similar candle here as well, but in this case this did have a lot of wicks, so this will not really be a Marab Boza candle as such. But again, this candle does have good momentum as well, because it's got a very long candle body. Even if you didn't know the name of it, you can appreciate how the candle is so long, has very little wicks, and so it just shows the strength of the actual sellers in the scenario. So the next common candlestick formation is the hammer and the hanging man. The left one is the hammer, and again it could indicate some potential reversal pattern. And as you notice, both these candles have very small bodies with a small upper wick and a long lower wick. And what this means is that we had an open here and a close here, but sellers could not push it down enough to maintain price here. So it was somewhat as a wick of emotion. And it's similar here as well, but the only difference is that the candle actually closed lower than where it actually started. And a hammer pattern could potentially indicate the end of a bearish trend and potentially the start of a bullish trend. And this hanging man could potentially indicate the reversal of a bullish trend and potentially the start of a downtrend. So this is a 1 hour Bybit chart on Coinbase, and we initially had this downtrend here, and as you can see, the candle closed higher than where it actually opened, and so it's a green candle. And you notice a small wick at the top and a much longer tail at the bottom. And so we had this downtrend, and we had this initial selling here, and we had initial selling here which went lower than this, but the sellers just could not sell strong enough to maintain a closure below this, and ultimately we closed up here. And this is an example of how Just appreciate what the candle's telling you, and you don't have to know the names off by heart. And ultimately, when this happened, this led to a bullish trend and an end of this bearish trend. And if you notice, in this scenario here, this is a hanging man. So it's very similar to this, but only the close is a lot lower than the actual open. This led to the end of this uptrend and the start of this bearish trend. So now moving on to the shooting star. This is very similar to the hammer and the hanging man, but it's pretty much a mirrored version of it. As you can see here, the upper tail is significantly longer than the lower tail. The upper tail of the candlestick is greater in distance between the actual candles open and close as well. And typically often they have no tail at all, or sometimes very little tail. And in this example here, both these have small lower tails here. And in this scenario, the candle has closed higher than where it opened, so it's bullish and green. But in this example here, the candle has closed a lot lower than where it opened, so naturally it's a bearish one. In this scenario, we have this downtrend here, and then a push up, and we have this candle with mostly a long wick, with very little candle body relatively, and the actual wick at the lower end is non-existent pretty much. And in this example here, a similar one but a lot smaller, you can see another shooting star in which there's a long wick. The actual low wick is much smaller and small candle body as well. And it's just to appreciate how shooting stars can present very differently. But in this scenario, I would be looking at potentially some key moving averages or some support and resistance line, and potentially this could be some kind of rejection and then push back down. And so in this case, this led to a bearish trend. And again, it's just an appreciation of how things can greatly appear differently in real life to compare to textbook chart patterns. So this is an example of a Dogee pattern. And a Dogee pattern is one in which the candle closes very near to where it actually opened. And it can potentially represent some kind of temporary indecision between buyers and sellers, and often has a very small candle body and often has a dash or a wick. In this scenario, you can see there's very little candle body, and here as well, and very long wicks on the upper section and the lower section. But in this scenario here, the actual candle closed slightly higher than where it actually opened, and so it's a green body. And in this scenario, the candle closed slightly below where it opened, and so it's a red body. And these Dogee candles can present very differently, and there's so many different types as well. You have long-legged one and a gravestone one, and as you trade more, you will really get an appreciation for these. And sometimes they can indicate some kind of a trend reversal or a trend consolidation. And again, I would really look at how they interact with trend lines, moving averages, and support and resistance. And some of them have very long tails, and some of them have very small tails. And in this example here, we had a one-day Bitcoin chart. We had this dump here after the FTX scandal, and we then had a push up here. And this doji here, you can see, it's got a very small body and a very long wick at the top. And so you had buyers, somewhat like a wick of emotion, but the buyers could not step into the point in which they could actually close higher than this. And then we had this bearish engulfing candle, because the candle completely engulfed the body of this one, and then we had the start of this downtrend. And so this is an example of how often candlestick patterns might interact, and they might also appear in combinations with other candlestick patterns as well. And so don't see each candlestick pattern as isolated, and try and spot as many as possible when you're really practicing in a section of a chart, because often they interact and there's so many at a given time. So now I'm going to talk a bit more about the evening and morning star pattern. On the left we have this triple candlestick pattern, which is an evening star, and it usually starts with a bullish candle, followed by a tiny bearish or bullish candle, and afterwards is usually a strong engulfing candle, and this leads to typically a bearish trend. And I always remember it as an evening star because this small candle is at 12 o'clock, so at midnight, and that's the evening time, and so that's an evening star. This formation here is a morning star, and again it's a triple candlestick formation that usually occurs in a downtrend, as a bearish candle is printed here, and then we have a doji potentially here, and there's usually a strong engulfing candle here. But again, there can be a lot of variation, but this example here and this one here generally indicates some kind of a reversal pattern, and this often can indicate the start of a bearish trend, and this one can often indicate the start of a bullish trend. So going on a 1 hour Bitcoin chart on Bybit, these examples are a bit harder to find, but I managed to find one here, and this is an example of a Morningstar pattern here. So the next candlestick pattern that I want to talk about are the 3 bullish and bearish soldiers. Looking at the left, we have 3 back-to-back bullish candles. And what you notice is that the bodies of these candles get progressively bigger. And the bodies of this last bullish one has virtually no wick at all. And this could indicate some kind of bullish momentum and really strength from the buyer's side of things. And looking at the right side, we have the 3 bearish soldiers formation. And this is the reverse. So we have 3 back-to-back bearish candles. And the bodies of the candles get progressively bigger. And this last candle here, wick, is virtually non-existent. And this could indicate some kind of upcoming bearish or downward move. But once again, I will never trade based purely on candlestick patterns, and I would use it in confluence with other things. But these are very useful things to really gain some kind of an edge and just to see how price interacts. And the recognitions of these candles are very important for price action. So an example of this we can see on this 4 hour Bitcoin chart on Coinbase. And as you can see here in this purple circle, you have 3 candles here, back to back, and the bodies of the candles are getting progressively bigger, and they're 3 bullish candles. And this indicates some potential strength, and we actually had a mini uptrend here as well as a result. And so this is an example of 3 bullish soldiers. In this example, we had a minor push up here, and then we had these 3 candles back to back bearish candles, and the bodies getting progressively bigger. This is an example of the 3 bearish soldiers, because you have 3 consecutive bearish candles like this. And the last one has very little wick compared to the actual body size. Of course, there's so many different type of charts you can trade. We've been mostly speaking about Japanese candlestick patterns, and that's what the vast majority of traders use. And I'm going to briefly touch upon Hiashi Candles. I use it sometimes, but 99% of the time I use Japanese candlestick patterns. Hiashi candle patterns are very similar to Japanese candlestick patterns in the sense that if the candle closes higher than it opens, then it's green. And if the candle closes lower than it opens, then it's red. And it often forms similar chart patterns as well, like Dogee. But there are certain key subtle differences. Hiashi candles generally try to filter out the noise to really get a better picture of the current trend. And so it really tries to smooth out the trend. We have this clear downtrend. But despite having this clear downtrend, even in these individual sections here and here, we see a mixture of bearish and bullish candles. And so the same chart, this is an example of a Hiashi candle, and if you go back, if you notice, there are certain key subtle differences. So in this Hiashi candle, it's kind of smoothened out. You see the general trend in this section and in this section, but in the previous example, you see a mixture of bullish and bearish candles. So the Hiashi candles have really filtered out the trend, but they're also calculated a bit differently as well to normal Japanese candles. Overall, it may help to get a general view of the trend and really smoothen out a lot of irregular candles and just to get a really good picture of the overall trend. Most people generally use Japanese candlestick patterns to visualize a trend, and in some ways Japanese candlestick patterns can also give a bit more information about the specific candles in a particular trend, and you perhaps might get a better idea of price action. But of course, Hiashi candles may have a certain use for you, and you may find it useful, especially when you're starting, to perhaps get an overall picture of the trend. And so perhaps both have a place, but mostly people use Japanese candlestick patterns, from my experience. And so this is all I have to talk about candlestick patterns. And I appreciate that it can be greatly overwhelming just seeing a whole host of candlestick patterns. And what's more important than actually learning these candlestick patterns off by heart is mostly recognizing and appreciating what it really means. And as you practice more and gain enough chart experience, you often pick up a lot of this innately. And it's really important to keep practicing and really see how these candlestick patterns really interact with key resistance and support levels, and of course key EMAs and SMAs as well. This is all I have to talk about in candlestick patterns.